Ira Epstein, and here we are now on the weekend of November 7th, 2021. I am still out of town. That's why I'm not in the videos that you're looking at. I do return midweek. Unfortunately, I've had the longest vacation I've had since I was under 30 years old. I was thinking about it, and I am a guy in my 70s now, so interesting. Normally, I can't handle them. This was easy, and I think it's a mixture that I'm able to do my work, the sun. It's beautiful down here, and it's cold in Chicago. So I think you put that all together, it's been a lot of fun for it. So as I look at the marketplace, the stock market up, you have good news in the sense that the infrastructure bill has now passed the House, and what that will probably do. So as I view everything, the market could get a pump up come early Monday morning in these markets or Sunday night because the passage of that bill is a good thing. Now you will see that the president hasn't signed it yet, and the reason is he's going to make a big deal out of this, and rightly so. He needs a win, and he's got to broadcast it. So there'll be a whole event take place this week to show how the two sides of Democrats and Republicans can get together and get something done. Of course, lying in the wake is getting nothing done yet on the reconciliation bill. But let's give the man his day, and he deserves it, and it's a good thing for the country. So now, let's go to the chart action and just see what the heck we actually have here. If you come to the E-mini S&P, the monthly, how can you argue that this is anything but a bull market? Once it crossed over, and you got to come back over to these points right here, this area here. It never looked back. It just keeps going up. This was the old high. I leave that on there so you can see it after a small correction and way back to new highs. Now, is the Santa Claus rally probably going to be here? Oh, yeah. I don't see anything to stop it. I could be wrong, but I expect that you're going to get that. Look at a weekly chart. You're just up and away. You were up another 2% for the week. I want to point out, notice how when the market was breaking, I said you get under these weeklies, you don't stay there very long. That is the nature of a bull market. There will be a point in time, it could be next year, in fact, 2022, where the market starts a different type of action. It gets under there and it breaks even more. And when that happens, you know the market is changing its posture. It hasn't done it yet. We wait. It'll look something probably like this overall area that you're seeing there. As we get over it and we look at just a bar chart of what's going on, well, after the correction, you moved up. And you can see here you had a deeper correction. It was the first more serious one we've had since all the way back here. And I'm going a year ago, not the beginning of this year or anything like that. So that was important to me. Where did the market fight its battle? The 18-week average of closes. We expected that. We saw it back here and here. And I kept pointing that out to the traders. Sorry about that. I'm in Mexico, so things aren't quite what it could be. When you're looking at the Bollinger Band, you're over it. Now, as I look at it, is the market a buy by the pros over a Bollinger Band? I'm going to repeat what I teach all the time. No. The market is ahead of itself. It can stay that way for 3 to 5 weeks, but it typically backs away. In this case, it jumped it. It had hit it back here, and it went even further. So it could have another week or so over that. Wouldn't surprise me at all. Momentum, you're yanking on the slow stochastics, trying to drive them to the point where they get up and embed. You're not there at this point. So I have an overbought market in a bullish posture. You can see that, but difficult to get long. In the NASDAQ, I view a market as being overbought right through here. The numbers are not embedded, and you've got a reading pointing still up on a weekly chart, so momentum is up. The bias is up, but again, you're over the upper Bollinger Band. No, I would not be telling traders that I think the pros are buying over that number. It doesn't mean it can't go higher. It's just not a high probability buy. Same thing in the Dow. Overbought to the upper Bollinger Band. The difference here is you're in an uptrend. If you come back to these other charts, you don't have that sequence of higher highs, higher lows on the swing line. You do in the Dow and you do in the Russell. And the Russell's one powerhouse. You heard me say that, not hurting me, but heard me say that. Why? All this sideways action for months, and suddenly you're popping out. this could be a breakout to the upside, which is different. How would I know that or judge that it has happened? By the market making a higher high than this week, closing in the top quadrant. The quadrant is divide a chart into four. If it's in the top 25%, then I would argue that until you get out and take out the most recent low right here, this market's working its way even higher. As a chartist, that would be my call. Doesn't mean I'll be right. The 30-year bond, sideways action. Now, this market has caught a lot of traders. I know people have trouble with charts saying, oh, you know, here you go. You're saying that the market's doing one thing, like it gets down to the 200-day average in the Bollinger Band, and people get bearish there. Not me, and not what I teach my students. This market, in my opinion, I'm sorry, but I'm on a computer and these weird things happen. Getting back here was totally natural to the 18-week average. This is where the market gets neutral right now. 10-year notes, okay. So we got to take this, which was there, and move it all the way back here. You have lower highs, lower lows. The rally, if you take out this high of 132.08.5, and you have not done that, would negate the downtrend. I think the pros started coming out of this market over here. I don't think they caught this play. I think they came out there, the first challenge of the Bollinger Band, and the market's about back there. Let's see what it does. It never did embed, and now you get a 22 reading to correct it. Momentum has to go up. That's often, but not always, accompanied with higher prices. In the dollar index, no, I think this is where pros come out, not buy the dollar, and I think that's how they're looking at it. You've got the 100-week moving average, you've got the 200-week, you got the upper Bollinger Band. Now, I see a lot of resistance right here. In the eurocurrency, you got lower highs, lower lows. It's the flip-flop of the dollar. This is looking, though, weaker than the dollar, which I find interesting, but it's not embedding. Week 1, 2, you need to get one more week down. Markets typically don't embed. They typically get and do what you see back here, into overbought areas or oversold areas, and turn around. So I'm looking for the turnaround, but that doesn't mean you're a buyer. The trend is clearly to the downside. It either happens or it embeds. I wait and let the market tell me which one. In the Canadian dollar, you're very overbought. You're making a run at the upper Bollinger Band. Doesn't look to me like it's going to actually make it. Could be slipping back here to 76.79. The trend, however, is up, just in an overbought condition. In the Japanese yen, a warning sign for you would be if the market gets over 88.32.5. That would give you higher lows, higher highs, and possibly lead to a rally back up here. What that would mean would be interesting, but right now, who's in control? The bears, but you are in an oversold area. Bitcoin, to me, is still bullish. Until you lose the embedded reading, I still like it. December 6th, in case you don't know that, is when the macro ethers are going to be released. The exchanges come out with their date. That will be a popular contract, just the way that these Bitcoins are. In Brent crude, well, the differential went from 411 all the way down here to 81 cents, and now you just went up by 50% of the 81 cents. Maybe a little bit too much of a play there. I had warned traders and you, hey, why would you want to go into the COP26 climate symposium? All that would happen there is nothing. In other words, you're not going to see prices typically go up. Do you think you want to get all those countries pointing at that point at OPEC Plus? No. But now that the meeting's over, guess what the market did? Oh, I guess it came off its lows. It is still down for the week. It was down 2%, but it's still embedded. I think that this market is still looking bullish, not bearish. Same thing in WTI, which was down 2.75%, but not a surprise. You were hitting the upper bands due to pullback. But when you get an embedded reading until the red line closes under 79, guess what? I think the pros are in there with both hands buying that market. Not so in gasoline. It never did embed. It just got overbought. Ran the upper Bollinger Band for 3 weeks, and suddenly it's back to the 18-week average with no trend pattern. You got a lower and low, higher high pattern. You put it together, It's interesting. So I will see you all tomorrow afternoon as I put one of these out. I probably won't be putting them out Wednesday. That is the day that I fly back from Mexico to the States. It takes a good part of the day, so I'll probably take that day off and be back in my studio shooting with you, and I'll look tan on Thursday. Take care now. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.